Hello, everyone, and welcome back to the Indy Real Estate Investing Podcast. I'm your host, Jeremy Tallman, and with me once again today is our brokerage manager, Rosie Birdsney, and Kelsay Bolden, who is our Director of Resident Relations. Welcome back to the podcast, you two.
Thank you. Thanks for having us.
Yeah, so we did a podcast 3 months or so ago. And during that podcast, we recapped the first half of 2025. And I got a lot of positive feedback about that. And Brooke in our marketing group was like, people like the state of the market. They want to, they want to know what's going on in Indianapolis. So we talked this week and decided we may turn this into like a quarterly event. I guess give the people what they want to hear. And during it, we're going to give, really good recaps on what's going on in the central Indiana market, from the brokerage side, the sales side, buying, selling, and then also to kind of round it out, what's going on in the leasing market, because everyone, particularly those people who have a home that's going to come on the market for rent, or they currently have a home on the market for rent, they want to know what's going on. And it's something that I hear when I'm out in the public talking to investors, and people are really concerned and want a lot of information about what's going on in the rental market. So I think bringing both you guys back on a quarterly basis could be fun and give everyone, current information on what's going on. So let's get into it. We'll start from a more general perspective, and that is, and Kelsay, I can start with you, but kind of give me your overall thoughts into what you saw in the third quarter from the leasing perspective.
Yeah, of course. So there was nothing out of the ordinary that we saw this quarter. So a lot of what we expect and we see year after year. So we are a seasonal market. We started to see things slow down in this third quarter, that's usual for us. Leases signed were just slightly under our benchmark, but we still had great numbers. So overall, we signed 70 leases in this last quarter, which is great. We're seeing higher renewal rates, which I know we'll talk about here in a little bit. And we just have less inventory, which can contribute to the lower number of leases signed. We just don't have as much on the market right now.
Yeah. Okay, Rosie, let's pivot over to you on you run our brokerage. So you do actually all of our listings and you manage our buyers agents. What are you seeing on your side on the sales market?
Third quarter, this quarter has not been any different than third quarters of years past, with the exception of we have less inventory from our end, less investors actually out there listing homes for sale. They kind of went on a little bit of a hold there. That includes larger institutional companies, everyday people that we work with doing their personal wealth growth. They've just had a lot more success with renewals, keeping tenants in place. And obviously, if something is coming up for a lease, they're opting to just go back and lease it versus going to the market right now. I would say that, our inventory is up for our actual market, but overall things are just not moving as quickly. So we're seeing a longer days on market. Prices are still fair. You can still get closer to market value, but they are trending down. So, so we're just seeing higher days on market for third quarter as compared to maybe last year. But yeah.
Okay. Yeah. Well, thanks for the kind of the overview there. Let's get into some pricing, and Kelsay, we'll come back to you. There's a lot of talk about rents. Like I said, when I'm out and about, and I read things online. I just read something a couple of days ago where an investor from out of state posted on a forum and just said, I'm not getting the same rents that I used to be able to get. I can't get price increases. I've been on the market a lot longer. That's very anecdotal, but I think it speaks to a bigger issue that we're seeing here in central Indiana and probably across the country, because we do network with a lot of property management companies across the country. And I think everyone's kind of feeling that. But what are you seeing with rents as far as, I guess, as a market and in our own portfolio, I guess, what are you seeing there?
Yeah. I mean, over the last quarter, rent prices, as far as homes on the market, they're very stable. So we're not seeing super high increases. But if we look at the market overall, even for T&H, our average rents are increasing slightly. There could be several factors that play into that.
Right.
But overall, right now, rent prices are very stable. And during this time of year, the third and fourth quarter, we do see them drop slightly. So that way we can get the homes leased faster and you're not risking vacancy cost.
Right. So you're seeing, again, just kind of maybe a normal market. We're not seeing the big run-ups that we've seen before. Let me ask you this, not to put you on the spot with these specific examples, but have you, or maybe in your group, have we had, someone give notice and move out, owner wants to re-sign up and release the property? I'm just curious, like are you coming to owners, or there's any examples where you tell owners, hey, we're going to have to ask less this time? Like, you're not going to get as much as you did last year when the lease you signed for this last tenant. Are we seeing much of that, or not?
So what we're doing on our end is we are fighting tooth and nail to keep the resident in place, because we know that if your home becomes vacant during this time, you will be receiving less rent or just the same amount of rent as what the current resident was paying. And the reason why we want to keep the current resident in there is because we don't want to risk, turnover cost just for the rent to be the same, right? So we have had those conversations. I don't have any specific examples, but I know we've had different talks within our group of clients who reach out to us and say, I want a higher rent. Let's go ahead and give this resident notice. And we actually push back on that right now and say, let's go ahead and keep them in place at least for another couple months until we hit our busier season in the spring.
Yeah. So you're saying that, and there's some assumptions we're making here. We're saying that you're currently at market value, or you were let's say someone moved out last month. So 12 months or 13 months ago when we went to renew this lease, you were at market value. And today, if they move out, our messaging to landlords is, you may get the same, maybe a little less, right? So that's an interesting statistic, or interesting messaging. I think it's probably, and I don't think it's like a rule, like it's going to always be that way, because we know some areas perform better than others. But generally speaking, if someone says, I need to get higher rent, they should probably work with that resident to get the higher rent, or at least compromise in some way, instead of just booting them out and hoping they can get a higher rent. So that's interesting. Rosie, over to you. What are we seeing as far as, let's talk Indianapolis. I know we represent other markets in central Indiana, but Indianapolis is the biggest by far. So what are we seeing with median sale prices in the Indy market?
So I would say that overall our median sales price is around the 250 mark in Marion County. That's going to be a broad area to cover. There's such an array of properties that are available. That's condo, single family, all those types of things. Some of those are going to be a little bit higher. Obviously, when you're talking about having an investment property that was held as a rental for a few years, you're not going to have all those pretties, if you will. Then an owner occupant spent time and money and effort into doing that sweat equity. So there are going to be some things that might offset that you might see more on the retail side of things. But 250 is a very strong number for Marion County. I think it's, we're not seeing it sway a drastic amount one way or another as compared to last year. Some areas are getting a little bit more, some areas are getting a little bit less. It just really depends more so on the product you're putting out there and what is being offered to buyers. So if you have a property where you have a little bit more wiggle room where you can offer concessions, then you see a little bit better traction as to compared to a property where they're very firm with their price and they are high on their price, such as a flip, maybe. Some investor that came in and bought a property last year in one kind of market versus another. Last year, we saw the same trend as we did this year, but with less inventory where, seems like August, sometimes the market gets flooded with inventory and then it kind of is a standstill in September and then it slowly starts to pick up at the end of it. Certainly July is always wonderful. There's lots of activity going on in that, but it comes to a screeching halt when schools start. So that's kind of what we see in August. The inventory goes up and then it starts to slowly fade away. And you just see the market starting to chug along again at the end of September. So that is where you start to see prices trending down because people are trying to get that momentum, trying to get insight offers, trying to get people to come look at their property. So you start to see them, while we might go up a little bit in third quarter, you'll start to see that trend down in fourth.
Yeah, and to your point, I'm looking at I like looking at Marion County single family, right? Because that's kind of the bread and butter rental property. And I know, again, we represent other markets, and there's a lot of great markets around Indianapolis, but there's a lot of homes here, there's a lot of data here to where you can draw some conclusions. And to your point, we went down from August to September. The median sale price went down 2.7%. So we're a very even number. Like you mentioned, our median sales price in September for September was $250,000 exactly. Like there's no $250,000 and $24. It was $250,000 exactly. But that does represent a 3.3% increase from September of 24. So overall, we saw a 3% increase in sale price, but it's starting to trend back down again, probably because we're entering that slower season that we always have here in central Indiana. So we touched on a little bit, but Kelsay, talk about days on market. That is a question that every investor that comes through our system, and you talk to Jake, our business development manager, how fast can you rent my property? Because they want to know, they want to know how fast they can start receiving rents. And so talk about days on market and in respect to this last quarter.
So right now we're hovering at about 35, but overall on the last quarter, we saw great numbers for that slowdown that we typically see. So we track our numbers, so our days on market, and then we also track the rest of the market as well, just to see how we compare. So over the last quarter, our median days on market was at 29, and then the rest of the market was actually at 49. So we had a huge advantage over the rest of the market, which was really cool to see. Yeah,
that's something that I think we should all be proud of as a company, right? That we were able to beat the market that way. So that's interesting. It was 49 days, you said, was the median days on market in the third quarter and basically what we do is we take all the rental properties in central Indiana that rented through the BLC, and then we take our numbers out and we look at what all the other people collectively are. That's really high, and I think it speaks. I think I've produced some content on this. We've talked about it, but it just seems like landlords are just still being stubborn a little bit and saying, well, I have to have more rent because, and they're right, my property taxes have went up, my homeowner's insurance has went up. The cost to just even own this property in terms of maintenance has gone up drastically. We've done all kinds of content around that. But the reality is that rents aren't tracking that way. They're just not. So that delta between what it costs to be a landlord and what you can earn to be a landlord is growing. And that's not a great story for landlords, but it is the reality. It won't always be that way. We know things will probably right size over the next few years, but that's kind of the market we're in today, and just a reality that, and I'm sure you preach this all the time, Kelsay, it's more important to get someone, a highly qualified resident, in the door quickly than to hold out and hold out and hold out to try to get a few more dollars. It just doesn't pencil out if you put that to paper. You want to get those people in there quickly. So, Rosie, how about you? Days on market. What are we seeing here in central Indiana on the sales side?
Our sales side days on market are up. They're higher. Anytime somebody reaches out to me to talk to me about potentially selling their property, maybe because they're struggling having it lease, or they're not going to get that rent that they need in their mind to have the property cash flow, if you will, or produce for them like it used to. So I prepare them that you're going to see at least 30 days unless you put a perfect product out there, because that is what buyers are expecting right now. Our market is very much in a shift and has been for a while, but I feel as though we're kind of still in that scenario where it's the high noon, where you have sellers on one side, buyers on another, and we've got our guns drawn and we don't know who's going to shoot first. There's tumbleweeds everywhere. You hear the whistles, you hear all of it. And it's very much, you're just waiting to see who's going to win this war. And I will say some sellers win and some buyers win. So it really just depends on what kind of product you're putting out there. If you have a property that you don't want to do a turn on and you're willing to take a loss because it makes sense for you to do that, then your days on market might go a little higher just simply because the product is not perfect. But that's where you have to price yourself aggressively in this market. It's not a market where, you know, you can go out there and you can price it $5,000 less than maybe everything else that's going on in the neighborhood. You're probably going to have to price it about $15,000 or more, honestly, or be willing to
show a big discount.
Willing to show that you are going to give a concession towards them to limit those days on market. But yeah, for me, I feel as though I'm not shocked when I see 30 days on market if you've listed late July, early August, going into September. We're seeing higher days on market for sure. And that's not just us, that's across the board for everybody. And minimal activity on showings or listings having showings. So it's making it more competitive for sellers out there, but buyers, especially if you're an investor buyer, there's opportunities there. So
Yeah. And to your point, I show the median days on market in, again, Marion County single family was 23. That's pretty good. I mean, honestly, that's a pretty good number, but relatively speaking, it's not, because that's a 44% increase on days on market from this time last year. 44%. But I do think it's interesting that generally speaking, you can actually sell a home faster than you can lease it. That's interesting. But again, 23 days, not bad, but they're really going up. And then I guess to further illustrate that point, active inventory, I show that there were 2,468 single family homes available for sale in September. That's a 20% increase in inventory from this time last year. So there's a lot more for sale. It's taking longer to sell them. So it is shifting. And I love your analogy about kind of the Wild West about, I think both parties think they have power now. I think the sellers feel like they're still in that position of power because that's what they've been told. That's what they've read about for years and years and years. But now buyers who are coming into the market and, hey, now, you know, there's an opportunity to buy. Maybe realtors are telling them that, whatever. And I think there actually are good opportunities to buy. But both people come in thinking they're in the position of power, and both probably get humbled a bit during the negotiation process because it's just probably a lot more compromising going on both sides of it.
I actually had a well-qualified buyer who asked for minimal closing cost assistance come back during an inspection response and actually asked for a refrigerator light bulb. So we are getting back into the market where they're being very particular. They're paying top dollar. You know, our seller got market value for their property and very quickly, but they asked for that refrigerator light bulb. So it's those types of things that anybody going to sell needs to be prepared for. And if you're going to go buy, don't be afraid to ask for those things either.
Yeah, interesting. Refrigerator
I know,
light bulb.
right?
Yeah, okay. All right. Kelsay, what's leasing? I mean, I think maybe an obvious answer to that, but we're still leasing homes very quickly in some cases. Sometimes they don't lease as quickly. What's leasing now?
I mean, we've said it before, but homes that are in great condition are leasing. Similar to Rosie's side of the story with buyers being more particular, our renters are more particular than ever. And so when we're advertising a property and, you know, we have it listed, it needs to be listed at market, not over market, right? So a home that is priced accordingly and is well kept, well maintained is going to lease much quicker. Some common feedback that we get, always paint and carpet. That's, you know, the two biggest things. But something that we've found really interesting, and it's not going to pertain as much as we move into the slower seasons, but we've gotten a lot of feedback about landscaping recently from renters. So it's something that, you know, as an investor client, you might not think about that would be an important feature, but renters want a well-maintained landscape property. And we've seen that feedback more this year than the last few years that I've worked with T&H. So I thought that was an important thing to bring up. But yeah, homes that are priced accordingly in good condition, that's what's leasing.
Yeah, I wonder about that. Landscape is interesting. I wonder if it's more of a pride of ownership like pride of rentership.
Oh yeah.
If that's not even a word, but they want to feel good that when they walk up to that
Yep.
property, it looks good. It's been dry recently. We've had a ton of rain this year. I don't know if that's contributed, like all this stuff just kind of going, maybe it's growing faster than normal and it's harder to keep up with it. But I think that's really interesting. I don't think it's something that if you're an investor listening to this, I don't think you need to have like hire a landscape architect and, plant all these rose bushes. But I think your point is make sure the weeds are gone, make sure the mulch is there, make sure that the yard is maintained well during these showings. To create an attractive product, because there is a data point out there. I don't know exactly what it is, but it's something like 75% of all buy decisions are made from the car, meaning when they pull up to the property, they already know the price. They probably looked at interior photos, but now they're there and they're like, okay, this feels like home, or it doesn't, right? So so you kind of made your mind up already. It's like, hey, let's just go in and confirm a few things, and you get in and you go. So I think that's a really good nugget to take away, is that make sure your yard looks good, make sure your bushes are trimmed, make sure trees are trimmed, and things just kind of look attractive, because it starts there. And the inside's important too, but I really like that perspective. Rosie, how about you? Similar story on what's selling and what's not?
Oh yeah. If you put a property out there that is the curb appeal that you guys are talking about, that has been something big that I've seen as well. Not everybody wants to go in and have to, do the finite cleaning up and doing all of that. It's that, I would agree with you, Jeremy, it's that pride of ownership on that curb appeal, whether it's ownership or rental, because we do see a lot of people who are renters, a lot more than what we were seeing. So I think that the curb appeal is going to be a factor that comes up for the next few years as well. But the properties that are out there that are selling and getting offers very quickly, one, priced appropriately, but I would do every little thing on when you have a move out report, we'll take a look at it. Maybe not a toilet paper holder, but certainly we're doing fresh paint, we're doing flooring, we're not cutting corners. We're going through and looking for things that are going to pop up on the inspection, even on scraping and painting of the exterior. Can we do some finishes? Can we revamp this bathroom without, breaking our budget? Can we give these things a nice minimalist look to them? Can we clean them up and make them sparkly? We don't have to make them brand new, but can we make them sparkly? Can we make them more appealing to those who are walking through them? Because they're going to put their own personal touch on it. So when I have a property that comes to the market that's like that, where we've gone through and we've meticulously, looked at each room and how can we make it more appealing to just anybody, as well as, the exterior, what other factors, do you have a garage, do you have a fenced in yard, how does that fence look? We're looking at those things more so than we were maybe a year or two ago. And I think that we're seeing success where we're getting full price offers the first day on some of those properties, but we are getting concessions as well being requested from the actual buyer, because the buyer has to pay for closing costs. Buyer has to pay a down payment. The rates have come down. We are in the sixes and they're slowly ticking down, but they're still not where they used to be. And I don't think they'll ever be where they were a couple of years ago, but they are wanting more bang for their buck. And I think that that's something sellers have to be prepared for. Certainly properties that are older, we're talking back in the 1900s, 1950s, 1960s, as long as you have updated them and made them look nice and appealing, you are finding those buyers who want those, that mid-century modern era that just had great craftsmanship. But we're also seeing them gravitate towards the early 2000s as well. Some of the other things in between, it's a little tougher. Certainly, if you're in a niche neighborhood or a trendy neighborhood that has an older property, such as like Butler, Tarkington, you're going to have to make sure that you've done everything to basically redo that whole property to make sure that the foundation is sound, everything looks good, and nothing's going to be frightful for them. Another big factor is roofs. I'm every single property, the roof has been a concern, whether it be an agent calling asking how long ago did they replace that roof, or will they give a
Yeah.
roof concession? Because everything over 10 years is getting pushed back on by the insurance companies. And that is, I started to see this trend late last year, but every single transaction this year, that question comes up every single time. And some insurance companies will just flat out deny buyers. So that is something that I would keep in mind. If you are thinking about selling and you haven't done a roof in the last 10 years or beyond, and even though it maybe is fine because, we put on 30-year shingles, they're supposed to last 30 years for whatever reason. They're not allowing, they're not accepting that these days. Be prepared to either give a concession or get it replaced prior to listing it. So that's a huge expense that maybe people aren't counting on. But I think that the buyers are more educated, where you could have probably gotten away in 2021 of making things pretty on the inside and not really cared about the overall maintenance. You're going to have to do more of the overall maintenance. They can make it pretty on the inside. I think there's a lot more people who are willing to put the sweat equity in these days on some of those things versus having to shell out a huge expense of a new roof replacement or new fence because they want to have, place for their dogs, kids, family, all of that.
Right. Okay. Good stuff. Roofs. Guess they're important. They are important, obviously. So Kelsay, what's your messaging to people that are, let's say resident gave notice last week and you have a conversation, or someone with your staff has a conversation with an owner and they say, hey, how are things, if I put this thing back on the market, what should I expect? Like what should people expect if their home's on the market today or just went on the market or will go on the market soon?
I would say you should expect to be patient. Again, right now, things are a little bit more slow, but overall, we know that this is a tougher time of year. We implement additional communications. Yeah.
It always is. Right.
It always is. And
Yeah.
we have additional communications with our clients during this time. We pull, updated CMAs every 30 days. So that way we can continue to keep our clients educated on, okay, here's what the market looks like. Our goal is the same as theirs, to get their home leased as quickly as possible to a qualified resident. So
Sure.
we are doing some cool things on our end to get their homes leased a little bit more quickly. One thing that we implemented this year is Lease Lock. So it's a deposit alternative program. And what that does is it still provides our clients the coverage of a security deposit up to 1.5 times their amount of rent, but it allows residents to move in more quickly. So they pay a monthly premium versus an upfront deposit. And we've seen success with that. And I think that probably contributes to our lower days on market as well.
Yeah, I think there's no doubt. We've had at least one other, maybe two other security deposit alternatives over the years, but when we landed with Lease Lock, they were integrated with some software we use, and they're a huge company. I think they've been around a very long time. I feel very comfortable with that solution. So good stuff. Rosie, what should sellers expect if they go on the market now?
They're going to have to be expected to have patience, just like what Kelsay said. Very much.
Yeah.
I have a communication cadence where I'm reaching out to you every week on Monday to say, hey, this is what happened this previous week. If we see something that, call to action, something to do, such as, hey, this flooring is not great. The flooring finishes really do make a big difference. Like, people hate carpet right now. Like, they hate it. Like, they sometimes want it in their bedrooms, but like most of people don't want carpet anymore, just because it just clings everybody else who's been in that home, and everybody wants to pretend like it's brand new and everything's wonderful and it's been theirs and only theirs. So back to your question about if you plan to list by the end of the year, expect higher days on market. We don't see the market go to where people just aren't doing showings as much because of weather until later in the year. Probably it would start in 2026, as long as Mother Nature is kind to us and we don't get a bunch of snow and ice before then. But January, February are more affected by those aspects. But I would, consider, we always finish fourth quarter strong with a lot more things being sold off. that maybe were lingering from August to September. I've seen a lot more activity picking up in the beginning of October here than what I was seeing for the whole month of September. So our weekly showings in September were about 11 a week, and I had more than 11 listings happening, and they've quickly jumped up to 30 and beyond some weeks.
Right.
So they are coming back out. Another factor is those rates are going down, so they are interested in looking because they are getting locked in at a lower rate potentially before the end of the year. For an owner occupant, they could be tired. So they could be tired of looking at things, and the inventory is kind of, yes, we are getting more inventory over and over, and you'll see the new inventory that enters the market that week go faster than probably other things that have been out there. So if you're getting past 30 days on the market, there's something that we need to adjust, whether it be price. Let's replace this flooring. Let's paint this room that's maybe, a purple to a more neutral color. Let's revamp that bathroom. Hey, the fence line looks cruddy. We need to get that cleaned up. Or, I've had a
Landscaping, right?
I've had a perfect property that literally had a brand new roof on it. Inside is very functional. The layout is great. The location's not the best just because it was a notorious rental neighborhood. But everything else, the maintenance, everything has been wonderful for it. But I am starting to see neighbors are killing deals because they have junk in the yard and they don't have curb appeals. So it's affecting my sales. But those properties that property has been set up for success. So we have to choose something else to move it to being sold. As far as you can't change your location, you can't necessarily, there's certain factors you can't change about it. And location is always the biggest part. And you can't control your neighbors. You can maybe try to get a violation, but it's so hard to get the city to come out and do something like that for them. So all in all, and rambling all in all, the best thing that you can do is adhere to our proven process. You don't necessarily have to do all the wonderful things and the health and safety that we do for rentals, but you do have to be prepared to compensate, be prepared to give those concessions to buyers, or be prepared to have a heavy turn where you're going to spend, significant amount of money to get the money out of it that you want.
Okay, cool. Thanks for that. So I want to end it talking about a topic, Kelsay, that we spent a lot of time talking about as a company this year, and that's renewals. And I think that's speaks to a lot of, you said our leasing isn't we're not hitting our leasing metrics necessarily every month. And this is a main reason why, right? Is that, and this is a good reason why, and a reason that most owners love, and that's renewals. Talk about renewals, because I think there's some, and we talked about it last time we did this, but I just think it's just continued, and it's pretty remarkable to see what's going on in the market.
So, like we said in leasing, we're seeing less inventory, but we're also seeing that across the market as well. So in Q3 of last year, we saw a number of 798 homes leased in the Indianapolis market. And this year, that number dropped down to 415 homes leased in Q3, which is a huge difference.
Yeah, that's, and just so everyone knows, that's, like you mentioned, Kelsay, that's Indianapolis BLC leased homes. So it's not everything. And so this is data we have, easy access to, and we report on it every month. So we're measuring the same thing over and over. And I'll say, we were talking about this before we hit record here today, is that's 798 homes compared to 415. That's a huge discrepancy, big difference. I will say 798 homes was a bit of an outlier last year, though. But if you just look at quarter over quarter, starting with this year, Q1 of this year, 353 homes went through the BLC that leased. Q1 of last year, 573. It's more than 200 more homes. Carrying on Q2, 382 this year, Q2 last year, 455. And as you mentioned, 415 homes leased to the BLC in Indianapolis this past quarter compared to 798. There's probably a lot of factors there, right? I mean, I think, but I think the biggest, or one of the biggest, is that people are moving, right? They are signing their leases. So there's just, the tenant pool is smaller. And so it's just harder right now, I think. It's great if you own a home and you have a resident that keeps renewing. If you go on the market with the property, and I'm a good example of that because Scott and I have people that renew their leases in our portfolio all the time, but we have several vacancies right now, and it's painful, right? Because it's like these homes used to lease very quickly and now they're not. So I know that's very anecdotal, but I think it speaks to maybe the bigger market that we're experiencing that. So what is the...
And you guys have some beautiful upgrades.
Yeah, we made some significant upgrades, and, lesson learned, probably tried to hit a price point that we really couldn't. We learned from that quickly, and then now we're pivoting and we're getting some things leased. But what is our overall renewal rate, Kelsay? Do you have that ready? I know we were in the 65-70% range at certain points this year.
So for the quarter, we are at almost a 60% renewal rate,
Right.
which is an excellent
Yeah,
number.
and we've had months this year where we've renewed more than 70% of available leases that were up for expiration.
Interestingly enough, in February, we had an 82% renewal rate.
Who wants to move in February? True.
Nobody.
Right?
Yeah.
that's I think that's historically the coldest month we have here in central Indiana,
Lots
I
of
think.
ice.
And so who wants to move to it? Yeah, ice, snow, cold.
Yeah.
It's brutal. So
I read an article recently. It was either in Wall Street Journal or the Times, but it was talking about how people who are qualified to buy are actually still choosing to rent in a lot of cases.
it's cheaper. It is.
I'm an example of that.
Yeah,
honestly.
it is. I think I've seen some recent data on that. It's just, especially in some, I think I saw Las Vegas was the example, but it is so much cheaper to rent than to buy. So I get it,
People
and I think that's probably
staying
driving it
put.
too, is driving the renewals, is that, interest rates are higher than people are used to, and they're just like, I think I'll just hang out and hope they go down. And this will eventually come to a head. People are going to move. We know that. But right now, we're enjoying, and I don't think we're alone, but T&H is enjoying some incredible renewal rates, and we're really happy about that. So, well, ladies, thank you so much. It's been a good recap of the quarter. Things always slow down, and they're going to continue to be slow this last quarter. And I think you've given some good practical advice on what to expect and what to do and what gets homes sold, what gets homes leased. And so appreciate you both coming on here.
Absolutely. Happy to be here.
Thank you.
All right, everyone. Thank you so much for listening. We'll be back in a couple of weeks with another episode. Until then, please stay invested in your investment.